Hello, everyone. My name is Izu Nwachukwu, and I'm the host of the podcast Real People, Real Business. And today I just want to share some of my thoughts around real estate investment. So, if you're someone who's thinking about getting onto the real estate ladder as either a first time buyer or an investor, but you're struggling with some of the exorbitant prices we're seeing in the market, I just want to share some of my thoughts about alternative markets which I call emerging markets. So this is not financial advice. I'm not a real estate guru. I'm just sharing my personal experiences with you, and hopefully that might give you ideas on how you can get onto the property ladder. So let me start by explaining what I call emerging markets. So emerging markets are markets which have high traffic or popularity in terms of tourism, but the prices of the real estate are not as high as you would find in some of the more mature markets like the UAE or in the West. So you have this combination of there's a lot of tourists coming in, but the entry level in terms of pricing is still very reasonable. And so today I want to share a few markets that are emerging markets and why I think that those markets are a good alternative to start to build your wealth around real estate. So the first market I want to talk about is Zanzibar. So Zanzibar, if you know, is a beautiful island at the east coast of Africa. There's a lot of tourists that come all year round. Sunshine, so it's a busy hub, and we're now starting to see real estate developers go into those markets and build off plan. So, and why this is favorable is that you don't have to drop in all the money and buy a property. You can actually pay for it instrumentally while it's being built. So that allows, again, for you to get in at a lower financial rate. Some of the perks or benefits of Zanzibar includes being, most of the developers are flexible. You can potentially find properties around the $40,000 mark for maybe a studio apartment. You're looking at net 8% ROI, and I say net, which means ROI is $1,000 mark for maybe a studio apartment. Around about 15%, but by the time you pay the cost, the tax, a management company to manage it for you there, you're looking at about 8% ROI. And also, if you're able to afford a property for around $100,000, the government will give you residency in that market, so you can work from there, but you don't have to pay any taxes. So there's a lot of perks and benefits that are coming, not just the low entry point, but also the flexibility with some of these developers. And it's quite a safe market as well. Most people tend to think that these African markets are not safe, and these are misconceptions and just lack of knowledge. The second market that's worth looking at is potentially Kenya. So especially when you look at Nairobi and Mombasa. Mombasa is on the coast, so you get all the beautiful beaches and turquoise waters, and Mombasa is the capital, which is more of a city life. There again, you can potentially find property from around $50,000-$60,000 for a small one-bedroom apartment. And again, most of the developers there are offering this on a payment plan, so off plan, and you're able to drop a deposit down. Again, I find that you're able to negotiate your payment plan with them and get the price that's right for you. And again, there are some additional costs from the government which you need to be aware of. But once all that's cleared and you have your property, you're potentially again looking at an 8% ROI net. Another market to consider is in Indonesia. So Bali, as most of you might know, is a very hot spot. Bali is becoming a mature market. So looking at a one-bedroom unit there is probably around $120,000, $130,000, depending on which area of Bali you're purchasing. However, if you go on to neighboring islands like Lombok and Sumba, you can potentially get a one-bedroom for starting from about maybe $70,000, right? I think there are some developers offering more sort of what they call glamping, which is a unit that's a one bedroom, but it's a shared bathroom, and that starts from around $40,000. Again, on payment plan, off plan, you can negotiate with them in terms of your payment plan, something that's comfortable for you. And again, you're looking at a net ROI between 8 to 10% within Lombok as well as Sumba. These two islands are a bit more pristine, a bit more local compared to Bali, which is a very hot spot. Another market which I'll suggest is in Thailand. So Bangkok, the capital, very busy, becoming a mature market. But if you look at Phuket, you're able to get something for around $60,000. You're able to get it on a payment plan, and you're looking at about net 7% ROI. And the final market which I would share which is one I'm still investigating. I'm looking at it, and hopefully maybe later this year I'll visit this island myself and get a bit more information, is Cape Verde. So this is a scattering of islands on the west coast of Africa. They speak Portuguese there. It's a beautiful island, very similar to Zanzibar and Bali. You're able to get apartments there from about 60, 70,000 euros. They price theirs mostly in euros. But again, if you're able to get something on payment plan, you're then able to negotiate your payment plan or even the pricing. And you're potentially looking at an ROI of about between 7 to 8%, depending on which parts of the islands that you get your property. So if you are struggling with, getting properties in more mature markets, potentially this might be an alternative for you to start building your property portfolio with emerging markets, because the trend with these markets is that they're going to slowly climb, and the more popular they become, eventually they will mature. So for example, I've seen properties in Zanzibar, the capital gain has been 100%. This is from personal experience. So by the time the property was handed over, the value of it has gone up by 100%. So these markets are not to be slept on. Do your research. If you have questions, please reach out to me, and I'm more than happy to share my experience and my knowledge. Again, I'm not a financial advisor or real estate guru. I'm just sharing how I've invested, and hopefully others can learn from it. Thank you very much, and let me know if you have any questions.